Welcome to Late Night Stocks. Today I will analyze three profitable companies: Netflix, PayPal, and Nvidia. Looking at the last Fed's meeting, Jerome Powell's speech, and Nasdaq reversal, I will give price targets for each of them. On the 16th of March, we had the Fed's meeting, and that was very critical for the stock market. In this meeting, Jerome Powell gave us clear explanations of war affecting inflation. Before the Russian invasion, we were expecting peak inflation around February and March, but due to this invasion, we had a lot of spikes in the commodity prices and oil. This, of course, affects everything. That's why Jerome Powell said we may see the peak inflation around June-July. So he postponed his peak inflation expectation 3 months and gave the stock market some air. That's why now Wall Street will target the CPI data on June or July. And until then, we may have a bull run. After this meeting, we clearly see the positive impact on the indices. Let's have a look at the Nasdaq first, then go towards the other stocks. Here you can clearly see that Nasdaq made triple dip here and made the reversal. First dip occurred when Russia invaded Ukraine, then stock market was tumbling, and after the Fed's meeting in 16th of March, we had these reversals and we break these moving averages. If we break 14,300 level, then next target will be 15,100. If we break this level, then next target will be 16,500. I don't think we will be doing all-time highs again in the short term because of the inflation and the growth concerns, but we may have a solid bull run till 16,500 in the next 3 months. If we check Nasdaq 500 companies, here you see the top 8 companies have more than 3% weight in the index. If Nasdaq goes to previous highs, then these companies will go as well for sure. Due to rate hikes and inflation, I think the profitability will be the main driver for the stocks. That's why in this video we will have a look at the 3 profitable and growing companies: PayPal, Nvidia, and Netflix. Let's start with Netflix stock. Netflix is now at $380 and a $170 billion market cap. After seeing $700 all-time high in November, we had a 50% drop and we made the dip at $350. We clearly have a bounce back now, but what is the next target for Netflix? Is there more pain ahead, or is this the opportunity to buy the stock? Netflix added 8.3 million paid users in Q4, which was slightly below the expectations. Furthermore, the streaming giant expects its global paid users base to reach 224 million users in Q1. That is a huge number. However, some people think that due to Russia-Ukraine conflict, viewers have pivoted towards news. Yes, that can be right because we are now living in a world like in Netflix series and movies. That's why they are watching news. And that can reduce the screen time on Netflix. In addition, this analyst is not happy with the pricing of Netflix. Netflix is fighting a losing battle by retaining a premium price point, while all other streaming competitors offer a lower priced options coupled with more content genre diversity. So due to this premium pricing, some viewers go to the other competitors. To overcome the situation, they think that Netflix needs to add lower priced and ad-driven tiers to expand its total addressable market. And they also say that they should bring news and live sports to its offerings. On the other hand, JP Morgan says strong secular growth remains for Netflix stock. Inline Q4 subscriptions and light Q1 outlook have driven lower growth expectations and increased questions around subscriber penetration. Although there is a huge competition, Q1 content of Netflix has also performed above expectations. They also underlined that there is still strong growth in global streaming in the long term. At the moment we have 30% in streaming and 70% in TV, so if they become like 50-50, there is still growth ahead. JP Morgan gives $600 price target, and average price target for analysts is $515. If we check the quarterly earnings expectations in 2022, looks like we will have similar numbers compared to last year. Okay, what about the stock price? After Q4 earnings, we had a huge gap due to lower guidance in Q1. Then we had Russian invasion news, and then stock price stuck around $350-400. If Nasdaq continues its bullish rally, I think Netflix can also go to $500 levels. We have Q1 earnings on 19th of April. I will take some of my profits before this day. This is not investment advice. What do you think about Netflix stock? Would you buy from these levels? Is $500 price target reasonable? Let me know what you think in the comments down below. Let's continue with PayPal stock. PayPal stock is now at $118 and $140 billion market cap, and it was up 6% on Friday. Did we finally hit the dip? Is it a buying opportunity? What can be the reasonable price target for PayPal? PayPal is laying out the bull case. Inflation, supply chain shortages, and Russian-Ukraine conflict increases unpredictability. However, CFO of Global Customer Operations John Riney remains confident that PayPal will continue to take share and grow faster than e-commerce market. Further boosting engagement are crypto users who check their balances each day, while the company also sees 21% halo effect from buy now pay later business. So it looks like PayPal is now working on regaining its footing. But what does this all mean for the investors? Keen thinks that PayPal is a buy and price target is $200. In average, we have $180. When we look at the quarterly earnings expectations of PayPal, we are still waiting the same numbers as last year. And regarding the valuation, forward PE ratio of PayPal is 25.4 compared to 26.2 forward PE ratio of S&P 500. It gives us an opportunity. When we look at the stock price, PayPal made the low at $92. On the 3rd of May, we will have Q1 earnings, and until then we may see an increase in the stock price. Due to remaining uncertainties like Russian invasion, inflation, and supply shortages, I think this slow moving average will be resistance for PayPal, and $150 is a reasonable price target. Not investment advice, of course. Due to these uncertainties, people may cut their spendings, but on the other hand, it is the first summer after the pandemic. That's why I have mixed feelings on e-commerce sector, but I will closely monitor the stocks like Amazon, Etsy, Affirm, and PayPal. Let me know what you think in the comments. Can PayPal stock hit $150? Let's continue with Nvidia stock. Nvidia is now at $264 and $660 billion market cap. After it made the dip at $210, the stock price has already increased 20%. Nvidia stock has made the strongest moves compared to PayPal and Netflix. Should you still buy the Nvidia stock? If you have the stock, where can be the levels to take profits? All eyes on Analyst Day. Investors are waiting for some answers from Nvidia. For data center business, we are expecting 100 billion total addressable market by 2024. Nvidia company has doubled their revenue last year with their AI products in high demand. In addition to that, they keep bringing high quality products in their gaming business. Recently, they made the rollout of the Ampere based on RTX 30 line of gaming GPUs. So far I mentioned AI, gaming, and data center business. Nvidia has really diverse product portfolio. With an inflection in revenue growth anticipated this year, Seymour expects more color on the trajectory of the automotive pipeline. They also keep growing in this automotive business. They recently announced 2 projects. One is with Mercedes-Benz, launch expected in 2024, and the other one is with Jaguar Land Rover, and launch is expecting around 2025. On the other hand, there is a cyclic downturn in the semiconductor industry. So if we have a decent bull run, maybe it would be wise to take some profits. Wall Street is expecting an average $350 stock price. If we look at the stock price, we see the similar pattern as Nasdaq. We made the triple dip and we bounced back. We have Q1 earnings on 25th of May, and till then we may have a bull run. In this year we are expecting higher earnings compared to last year, but we shouldn't forget that Nvidia has 46.8 forward PE ratio. Compared to 24 in semiconductor industry and 26 in S&P 500, it looks a little bit overvalued. I think it will hit $300 by Q1 earnings, but if we go above that, it would be wise to take some profits. This is not investment advice, please do your own research as well. All in all, we can already say that stock market has already priced in the high commodity prices, inflation, and Russia-Ukraine conflict. And in the last meeting of Fed, we didn't have any surprises from Jerome Powell. He relieved the stock market and gave 3 months extra. However, this doesn't mean that we will not see double-digit inflation. We may reach 10%. If we have an agreement between Russia and Ukraine, that can boost the stock market for some time. But after that we may be talking about 50-point rate hikes in the future, and that can cause the stock market to fall. In general, I am bullish on Nasdaq. That's why profitable, high-growth tech companies can have a good rally. I wonder what you think about these three stocks. Please make your comments and don't forget to like the video. See you in the next videos.